What is going on, my friends, and welcome back to the Crypto Catch Up. Of course, your number one place to catch up on crypto. Now, as many of you know, we have been talking about over the last week and a half roughly, that I thought that we had been seeing a decent time to be buying crypto. Obviously, not one of the best times, right? One of the best times would have been when Bitcoin was, say, under 50,000 a few weeks ago, but a decent time to be buying crypto. And it seems as if not only were we right, but it seems like we might have been really right. And I want to talk about a little bit, what's going on in the market right now, what we're seeing from the broad crypto market, what we're seeing from Bitcoin, and some more technicals and some more fundamental analysis that I'm doing right now that's giving me even more conviction that I think from a macro standpoint, this is still a good time to be buying, because I do think that in the long term, we are going to see higher prices from here. Quite simple. Quite that easy. So with that said, of course, let's just jump into it and let's kind of see what the market is doing since our video yesterday. Well, since yesterday, what we can see is that we have been seeing some pretty decent moves, right? BNB up a little, Bitcoin up a little, Ethereum up a little bit. Some of your other ones like Doge and Cardano doing pretty decently well. Nothing too stand out, right? Nothing too crazy here in the top 10, but definitely an overall better day than we were seeing yesterday. But what I really want to focus in on is the fact that from a more fundamental perspective, especially when we're looking at Bitcoin, things are changing like crazy. If we do use one of my favorite new tools, it's called the visual screener. There we go. What we can see is what people are doing just from a grand perspective in terms of longs and in terms of shorts. And over the last, I would say at least 2 weeks now, right? 2 or 3 weeks, people had been entering in on shorts. That's all they were doing. Longs were closing and shorts were being entered into. And everyone was betting that this market was going to fall. Everyone was betting that this market was going to pull back. And because we noticed that everybody was betting that, I told you, listen, the market will move in the direction of the most liquidation. So if everyone thinks this market is going down, it's probably going to go up. And so, of course, because of that, I told you it's a decent time to be buying some crypto, and that's exactly what we were doing. But now you can see the tide is shifting a little bit. In the last 24 hours, people are closing down their shorts and opening up longs. People are expecting this market to go upwards now that we've had that little pump, and they're trying to chase it. They're trying to chase that pump, which is usually pretty devastating. And so when I look at something like this, I then start to wonder, okay, well, what are liquidations doing? And if we go out to liquidations, what we can see is that liquidations has now favored this market pulling back. What you can see here is now more in the short term, more liquidations will happen on, to the downside than they will if we see the market go upwards. And that is because people are entering in on these long trades and closing down their short trades, forcing them into liquidations if this market does go downwards. And so what does that mean for me in the short term? Well, it means for me in the short term that things have gotten more risky, right? I definitely wouldn't be buying right now, just, if you're focused on a short-term perspective. If you're looking for the long-term perspective, which we're going to talk about in the second half of this video, I still think it's a great time to buy. I still think we're going to push up from here. But if you're looking for daily or weekly gains, right now, you're putting yourself at risk of this market pulling back again because people are chasing it now. And when people start to chase it and liquidations start to favor going down, then you're in a spot in which, it's a little bit more risky. Again, we saw people now chasing that hope that the market goes upwards, forcing liquidations to happen if this market pulls back, and that's a risky time to buy. Now, from a macro perspective, though, I don't really think it's a big deal, right? If you want to be dollar cost averaging right now for the grand scheme of things for a long term, I still think it's a good time. Not as good as we've been saying recently, but still a good time. The crypto fear and greed index, we are still in fear. When we look at the 30-day liquidations, we still would see a ton more liquidations happen if we see the price push upwards than if it pulls to the downside, meaning that the market over the long term should still move upwards into these liquidations. That's just what it should do because historically that's what it does. When we look at the crypto fear and greed index, again, you have to remember. Now we know, there we go. It's right here. Like whenever we look at this thing from more of a macro perspective, and let's just kind of zoom in on where we are right now. What you can see is we are still low. These blue bars represent where it's at. And although it is moving upwards, in the grand scheme of things, it is still rather low. In the last year, we've only spent 38 days in fear, and we're still in fear. That means that it's still a decent time for a macro perspective. If we do look at something like the RSI heat map on a weekly basis to get a feel for where it's at, it's still below neutral, or it's still like below the 50% threshold of neutral, meaning it's still a decent time to be buying. But if we do zoom this thing into the short term, if we look at the 4 hour, this thing is getting nearly overbought. If we look at the 1 hour, it's, right under that overbought area too. We look at the 15 minute, that one's a little bit more neutral. And so that goes to show that little 4 hour, 12 hour threshold, that's getting a little bit overextended to the top side, guys. And knowing that liquidations will happen if this market pulls back, it wouldn't shock me at all if this little pump that we're seeing right now is followed by a little micro pullback. And then over the grand scheme of things, we do continue upwards. Where I think we are right now is that the market is preparing to start making the general move back to the upside. But I think along the way, we're going to see a lot of chop. We're going to see up and down and up and down, liquidate, 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 liquidate. But I think the general direction will be upwards, especially over the next 12 months. Now, does that mean that this market can't pull back at all? No, absolutely not. I mean, obviously not. But I do think that in general, again, the general direction of this market will be upwards in the long term as a result of the macro, analysis that we've been doing here every single day. Now, I told you all that I wanted to give you a couple more reasons from a more macro perspective and a technical perspective as to why I do also think that we will start to see this market shift. Because what you have to understand is that this market has been in a downtrend. That's what it's been doing. As we can see here, it's been putting in lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and it's not stopped yet. It's been doing this ever since March of 2024, but things are starting to change, and we're starting to notice that this thing has reached a point in which typically and historically it should try to find some momentum to the upside. Now, a couple things that I want to pay attention to are our buy and sell zone indicators. I want to pay attention to our RSI, and I want to pay attention to our MACD. Honestly, I want to focus more on the Bollinger Bands today because I think it's more appropriate. Let's do that. Let's do the Bollinger Bands. So first and foremost, buy and sell zone indicators. What we can see here is that recently, every time we have hit the bottom side right here, and then 3 times right here, we have gotten this daily buy zone indicator flashing. Now, you may say it's not that important, but what you need to look at is that if we zoom this thing out, this isn't a common occurrence. In the last 4 or 5 times that this has happened, it has marked not only just the bottom of the bear market, but also the bottom of this pullback and the bottom of this pullback before seeing this beautiful run to the upside. In the last, year and a half, this has only gone up 4 times right there and 4 times right here. And again, it just went off again. It hadn't gone off down here. It hadn't gone off down here. It didn't go off down here. No. It only goes off in moments in which historically things are overextended to the downside. And historically, this should be a good time to be buying. And you can see the accuracy here. It is ridiculously strong. Now, if we do then correlate and compare that to what the RSI is doing, let's go out to our weekly charts. And let's go ahead and let's just remove this for now. And because I'm going to pull up that Bollinger Band in a second. But let's just go into our weekly charts real quick. And I want you to see what this weekly RSI is doing. So currently speaking, as we are now getting some buy and sell zones going off, you can now see that our weekly RSI is around this 50% threshold. Now, the reason why a 50% threshold is so important is because historically, the Bitcoin RSI will hit the 50% threshold when it's seeing a macro pullback during a bull market. During a bear market, we go way lower than 50%. During a bull market, it's usually around 50% before Bitcoin does try to make a move upwards. What I mean by that is, of course, let's go back to the last time. We saw this macro pullback. This was the biggest pullback that we had seen before the one we're seeing right here during this bull market we're in. And as you can see here, as we did hit this little pullback here, we came back to around that 50% threshold. Now let's go back to the last bull market before that. What you can see here is that as we did get this pullback during the 2021 summer low right here, Bitcoin came back around this 50% threshold before putting in that bottom and continuing upwards. Now, of course, it went lower than that during the bear market, but again, historically, it comes back down to around this 50% threshold during a bull market, during macro pullbacks like the one in which we're seeing right now, while it's currently sitting at the 50% threshold, and we got bullish divergence. What you can see here is we put in the lower low here on the price, but we put in a higher low here on this RSI. And typically speaking, a bullish divergence of this nature means that this move to the downside is weakening, and we could expect some type of reversal soon. Now, ignoring all of that and pulling up our Bollinger Bands, let's go ahead and go and get the BB going. There we go. What we can see is that this market is at the bottom side of its Bollinger Bands. As you can see here, these Bollinger Bands are squeezing together, and what these allow you to do is give you an idea of when we're overextended in either direction. And what's happened is that as we have seen this cool down and as we have seen this pullback, it's allowed these Bollinger Bands to compress and get closer and closer to each other, which typically happens before it sees some type of volatility breakout, before we see some type of strong move to the upside. And considering the fact that we were inside the bottom side of the Bollinger Band envelope for the last couple of months, it typically wouldn't tell that we could see some type of push towards the upward directions, oftentimes pushing into the top of the Bollinger Bands like we saw back here, which again entails that we would see some type of pump out of this current situation in which we're in. And so because of all of these things in which we are seeing, and most specifically because this damn buy zone indicators are finally going off again, I definitely believe that from a macro grand scheme of things, we easily could see this market continue upwards. And I think that an $80,000, $90,000 Bitcoin is extremely possible. Now, does that happen today? No. Does it happen this week? No. Does it happen this month? No, probably not. It could be into next year, but I do think that that's the course in which it's going. And it might look like this, right? We might, as I mentioned before, in the short term, liquidations are high to the downside. So we might see something like this happen, and we might see something like this and something like that and like this. But I do believe that over the long term, what we are going to start to see is this market trending upwards. And I think we're going to see this breakout from the structure at some given point. And even again, if it looks like this and that and this, that and this, boom, bam, boom, I think the general direction will start to be more upwards. And so because of that, as long as you can stomach short-term corrections, I think that dollar cost averaging now is still a good time because of that upward direction. And so of course, what I do want to do is tomorrow, maybe I'm going to talk to you about what the DXY is doing, the fact that it's losing a macro level of support and how important that could be, because Bitcoin typically performs well when the dollar falls. So I will be talking to you a little bit about that tomorrow. So make sure that you do stay tuned for that video. But of course, if you guys have been enjoying this brand new content on this brand new YouTube channel, guys, remember we have a goal of 1,000 subscribers by October, and we're damn near, we're getting close. We're almost there. So continue pushing. Thank you guys so much for those of you who like the videos and comment. It helps the engagement. More people see the vids, more people subscribe, and you help my journey a ton. So thank you guys so much, and I can't wait to see you all next time. Peace out, everybody.